On today's episode, we are going to take a quick look at 7 different companies. Today's episode breakdown is going to be the following. First, we're going to take a quick look at this list and try to find out where these companies are coming from. Then we're going to take a quick look at fundamentals for each of these companies, price action, valuations, balance sheet, income statement, revenue growth, and finally, I'm going to share my overall thoughts. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. All right, so let's just jump into it. Today on January 12th, CNBC kind of shared the 10 best United States places to work in 2022 according to Glassdoor. And first off, Jose, you said 7 companies. Here there's 10. Unfortunately, some of them are not public, so we're not going to be able to take a quick look at those that are not public. And the second thing I do want to mention is I do believe this is pretty cool. I am a huge believer that if you have a positive and happy workforce environment, it's gonna bring and kind of be able to keep retention of strong talent. And with strong talent in your team, you're able to innovate huge technological advancements and just overall increase your overall production and supplies and support and everything that you do. So I believe a happy work environment leads to a great company. All right, so now let's take a quick look at the top 10 companies. So number 1, and by no surprise to me, is Nvidia. This has been a monster, right, in the semiconductor industry. If I ever go back to engineering, this is definitely going to be one of the places I will send my resume to. But I think it's impressive, right? It's a prime example of how a great work environment can kind of move this company to being one of the best companies. Nvidia has done amazing returns to investors in the past year. HubSpot comes in with number 2. Bain and Company. This is a consulting company. Unfortunately, this one's not public, so we're not going to take a quick look at that. EXP Realty, which is in the real estate, is number 4. Box, which is in tech, is number 5. Boston Consulting Group is number 6. This one's not publicly traded. And we got another big giant here. Google comes in at number 7. Veterans United Home and Loans is number 8. Unfortunately, not public, but that is in the lending industry. Number 9 comes in with Lululemon. This one's actually surprising, and it's in the retail market. And number 10th comes in at Salesforce, which is another one in the tech market. So now that we got the list, now let's take a quick look at fundamentals. All right, so I want to start off with price action and kind of see how low are these from their all-time highs. And I just want to kind of keynote either the best and the 2 best and the 2 worst in each metric. So if we take a look, the ones with the biggest drop obviously is going to be EXP right now, which is down about 61%, almost 62% from its all-time highs. Number 2 comes in at HubSpot, which is the worst, kind of down over 39% from its all-time highs. If we take a look at ones that have been pretty stable, obviously we have Box here. Box is down only 4.6% from its all-time highs. The second one is Alphabet, aka Google, which is only down about 5.2%. So I do want to say, now that I see EXP World Holdings is kind of down a nice amount, I'm going to want to see how it's doing in the other metrics. But before we begin, let's take a listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. All right, so next let's take a quick look at the past year returns. Nvidia right now is number 1, returning over 107% to investors. This is also the number 1 company. Number 2 comes in with Alphabet, which is up about 61% compared to a year ago. Now, if we take a quick look at 2 of the biggest worst performers, or 2 of the worst performers, EXP comes in at number 1, which is down about 16.4% for the year. And then number 2 comes in at Lululemon. I'm actually surprised that even though we saw kind of that huge drop in EXP in the previous slide, it's still not that heavily down compared to some of these growth stocks we've seen right now. Next, I want to take a quick look at quarterly year-over-year growth. So here, this is, again, I want to see which is the one growing at crazy levels. Right now, number one growing the fastest is EXP. Their most recent earnings reported, they grew about 96.89%. Number two comes in at Nvidia, growing in at 50.3%. So that's pretty impressive. We can see most of these companies are actually, all of these in the most recent quarter reported, they have all grown over double digits. So these are pretty nice growth companies. The two least performers doesn't mean they're bad, it's just mean the slowest. It would be number one is Box, which grew only 14.3% same time last year. And then we also have Salesforce, which grew 26.65% same time compared to same time last year. And even though those are the worst performers in form of yearly revenue growth, quarterly year-over-year growth, those are still impressive numbers in my opinion. Maybe some of you guys might kind of disagree with that, but even the 14%, I believe anything double digits in the mid-teens is super strong. All right, so next I wanted to take a quick look at the balance sheet and kind of take a quick look at debt, cash flow from operations for all these companies. And this is very interesting. All of these are positive in cash flow from operations. And that's, as an investor, what I like to take a quick look at. We can see that is the purple. All of them are positive. Obviously, numbers are different. Each of these have revenues at different levels. At the same time, they also all have either a nice amount of cash and short-term investments, and some might have a little bit higher debt than others, and others might have low debt. So I want to take a quick look at what I believe are the best in forms of fundamentals. And for me, this was a very tricky situation to do. But there's only two companies out of these 7 that do not have any form of long-term debt and are positive in cash flow and are positive in cash and short-term investments. One is going to be Lululemon. They have about 1.3 million in cash flow from operations in the trailing 12 months, and they have about $1 billion in cash and no debt to their name. The second company is actually going to be EXP. EXPI is the ticker. They have about $228 million in cash flow from operations. They have about $100 million in cash and short-term investments, and they have no debt. Again, there are companies with better numbers, but in forms of having kind of cash flow from operations compared to debt ratio, those two are the best. Some of my least favorite, and again, it doesn't mean they're bad, one of my least favorites is probably Salesforce, just because they are the only company here that has more long-term debt than than cash and short-term investments. Again, it's not bad because this is a company that has plenty of cash flow from operations and should be able to fund all this type of debt, especially with type of acquisitions that they're doing. But regardless, out of all of them, this is my least favorite. And being my least favorite, it's still not half bad. So it kind of shows the strength of all these 7 companies. The final thing I actually wanted to take a quick look at were valuation metrics. Again, all of these are growing at different levels. All of these have different profit margins, different kind of gross margins. So their price to EV to EBITDA forward ratios are gonna differ. But there are 2 that I really, really do enjoy. The first one I want to say is EXPI. And this is one that I don't own, but their EV to EBITDA ratio is about 29.77. These are levels kind of seen in mid 2020, which I think is pretty crazy from a company that used to have a ratio of over 120, kind of that huge growth spike. It has really pulled down and seems a little bit more attractive right now. The second one obviously has to be Alphabet, with kind of sitting at that 14.48. Again, I don't want to say any of them seem kind of crazy. Probably the craziest one is Nvidia, with a ratio, EV to EBITDA ratio of about 62.37, and then we have HubSpot of about 114. But if we take a quick look at kind of revenue growth, Nvidia is growing at some crazy levels. HubSpot is also not too far behind Nvidia, growing at those almost 50. Nvidia grew its last recent quarter at 50%. HubSpot grew its last recent revenue at about 48.52%. So it kind of makes sense that those two are higher highly valued to some extent. The one that doesn't make sense, to my opinion, is EXP, which is kind of valued a lot cheaper, but it still has grown dramatically in the past few quarters. All right, so now I hope you guys enjoyed those fundamentals. Now just my overall thoughts on each company. First, like I mentioned, I do believe it is very important to have a very great work environment. Like I mentioned earlier, I think work environment really drives the kind of boost in a company. Two that I really did enjoy, some of the companies I really did enjoy and would want to do a little bit more research on. Obviously Nvidia, that one I know it like the back of my hand, so I wouldn't say Nvidia. But ones that I don't know is EXP Realty. That one had potential strong growth. They had a strong balance sheet. We saw all of them had positive cash flow from operations, and overall valuation metrics don't seem too bad. So that's one I wouldn't mind taking a quick look at. The second one that I don't own and wouldn't mind taking a look at after looking at these fundamentals would be Salesforce. Salesforce also, even though it had my least favorite kind of balance sheet, it was still pretty strong with plenty of cash and plenty of cash flow from operations, and their metrics don't seem half bad. So let me know in the comments below, what are some that you guys are focusing on, and did this list help out in kind of bringing new companies to your eyes?